All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I'm jumping on a little bit early here today, but overall wanted to jump on, take a look at the pre-market rundown, talk about my entries on FedEx and Twitter yesterday, and talk about what they are and maybe more importantly what they aren't. Because it was a very interesting reaction to me making those two trades yesterday. And while, yes, I understand it, I still kind of, I'm not sure what to do about it in terms of some of the reading in that happens. But before we go and we look at those, market futures are up about 11 points here this morning. So we're looking at open higher. This is coming on the heels of U.S. President Trump being scheduled to meet with the lead Chinese trade negotiator here today. That's going to happen this afternoon. And so that kind of trade optimism has pushed markets up a little bit higher. And again, this is just, this has been the normal reaction. Anytime we have trade war news, even if it's not news, even if it's not anything progressing, nothing happening, the market tends to push on higher. And that has been a constant, and that part is simply just not changing here. And despite some of the selling we saw yesterday, we don't see the metrics changing here. So a little gap up here this morning. Looking at some of where pre-market is and where things are set to open at and how they're set to open, it looks like some of yesterday's weakness is getting bought up a little bit, and some of yesterday's strengths are relatively flat here this morning. We are seeing the emerging market ETF up nicely here this morning. The FXI up nicely here this morning. So the Chinese and emerging market ETFs are definitely have the strength in them. Here early on, or at least here in the pre-market. Some of the material stocks that have been running strong, they continue to show some positive signs here in the pre-market. A little bit of lift in the banks here in the pre-market, but not a whole lot of type of earth-shattering types of moves. One exception is Kraft Heinz, KHC. This has been an American icon. And this is an earnings report that normally you'd never even see on, you never see the details of it or talk of it on the front pages of the market news. And it is all over the front pages, and it is down huge. We're talking about a $48 stock trading down to $36, and this is a consumer staple. This is a stock that, generally is known for a little bit of stability. Now, over the last while, this has been a stock that, has seen major sell pressure. I mean, it was trading up here in the 80s and has seen major sell pressure, and now is, set to gap down to a low that it hasn't seen in many years. And you can see, when Kraft Heinz, kind of split off back here, this is a very kind of troubled story, and a big write-down is basically being blamed here for it. In fact, if we come here to Market Watch, they did have it right here. They moved it over. But Kraft Heinz loses a lot of cheese as earnings send stock plunging towards a record low. Food Giant reveals disappointing results. Chops dividend. SEC investigation. It doesn't get much worse than that. KHC talked about some of their major iconic brands and products, kind of falling out of favor a little bit. We're seeing those numbers really, really drop here. So it's about as bad as you can have an earnings report when it comes to Kraft Heinz. And, they're not offering a forecast, going forward, which is not typical of the company. So there's there is some serious there are some serious concerns here, and this is something that investors just aren't going to be able to hold. They're not going to be able to wait to get out of. It's going to have some bounces, but I suspect it'll be kind of the opposite of a short squeeze, meaning it'll be kind of a long squeeze where where every bounce the longs take advantage of that and sell out and get out as fast as they can. So Kraft Heinz really going to take it on the chin here this morning. Now it's not a market mover. It's not this isn't a huge weight to the indexes. This isn't a story that has implications and reverberations across the marketplace. There's a story about that, changing taste buds and changing dietary habits of Americans, and even those outside of the U.S. and that's what this story is about. So I wouldn't read anything market wise here into it. Okay. So anyway, that's some of the pre-market set up here. The trade war deadline still March 1st or March 2nd, I believe March 2nd, like at 12:02 in the morning, something like that. But that is coming. If you, depending on the report you read, the sides are really far apart or they're really close together, and it does look like that some of the major issues, especially with technology, have still not been ironed out. But again, we're not really getting the details. We're not really getting what is going on. They've done a pretty good job of keeping most of that behind closed doors, or leaking out what they want, type of a thing. So I don't expect a whole lot more on that front, more than speculation until later today. I do expect we'll see U.S. President Trump tweet, and that's probably going to be a very positive tweet. Right? It's probably going to be a very upbeat, positive tweet about things. If it's a negative tweet in any way, shape, or form, the market's going to tank. If it's a positive tweet, market will kind of hold its gains and maybe drift a little bit higher, and that's kind of what we've been seeing with President Trump's tweets here of late. So anyway, that's some of the pre-market. There's not a lot of economic data on tap. I mean, there's just here you can see the smallness of the economic data. We did have the IFO survey in Germany here this morning, which is an important number. It's a business sentiment type of number. And you can see they revised the prior higher, but this month missed the consensus and eroded a little bit. Nothing new that we didn't see yesterday in the flash data. So nothing really new or game-changing about that number. We have Canadian retail sales today. Is that going to be a market mover? No. Baker Hughes Ridge count, is going to be a market mover? No. Not at all. So anyway, that's, market's kind of left to its own devices here today. And, should be a very interesting day. I don't expect the volumes to be huge in the market here today unless we get some sort of real solid concrete trade news that gets released and that comes out. Now, yesterday, I went and I got into two positions, and I did Twitter, which we had talked about on video, right? We had talked about the same video where I talked about how the market metrics weren't changing and they weren't bearish. I talked about Twitter and the bearish signal that it was giving, okay? Twitter and the market have nothing to do with each other. When I went and made that Twitter trade, I got a text about 20 seconds after. Oh, so now it's all into the downside of the market? Is it time to go? And my response was, whoa, hold on. No, not at all, right? And I can't stress this enough, and I have to stress it because of the response that I saw yesterday to my two trades. It was read as a bearish signal on the market, and that is just not the case. I can't make a bearish case on the market that we've talked about the market every single day. Talk about the market vibe. Talk about, the internals and how they shifted. And yesterday when the market was down, hey, you know what? What's going on? Are we seeing a shift in the internals? No, we're not, right? But trading in the market are a different beast. And please do not read into my trades that, ooh, I'm uber bullish on the market, or I'm uber bearish on the market, or all of a sudden a market opinion has changed. No, Twitter was a trade. Twitter is a trade. FedEx is a trade. Now, both of these have something very, very distinct in common. They both had earnings gaps down that when I went through the earnings report, I looked at it and said, man, these things, they could have a ways to go to the downside. There's some real erosion in both of these earnings reports. Now, that doesn't mean I go short them on the day they report earnings and just bet them going all the way down and everything else. No, right? The market's been bullish. It's helped to prop both of them up. But yesterday started seeing weakness in both of them, right? And these are two that I expect to underperform the market, right? They're going to go up if the market surges, right? If the market absolutely surges, they're going to go up. If the market drifts lower, they're both going to go down, and they're going to go down sizably, right? So neither of these are a play on the market or are a change of opinion on the market, have anything to say about the S&P 500, right? These are both kind of trades in their own right. Now, I am bearish on the market. I do think the market is due for some selling. I think it's due for a drop. I've made that very clear. But the signs of it happening are not here yet. And even yesterday, we talked about the little bit of selling that came in. That didn't change the signals. That didn't change the metrics, right? But neither of these are market trades, right? Do they have some risk because of the market? Yes, they absolutely do, right? They absolutely do. But one thing to keep in mind, and this was told to me many, many years ago, and you've heard me say it before, but one of the best ways to make money trading options is to position your options the way the market is not positioned. What does that mean? Well, if the whole market's positioning to the upside, you know what? Chances are things are going to drift up. But chances are, right? Chances are, if you're late into that, buying into upside options aren't going to pay off in a huge way. Unless you're doing daily or weekly or, those lottos. But if the market's all positioned one way and you're positioned the other way, your options are going to surge when the market switches. When it has to realize, wait, we're too leveraged one way or the other. And when I look at the metrics, the market right now is very leveraged one way. There is one result being priced in. There is one consensus about the result of trade news. It's a singular consensus out there when you look at the metrics. And I have to respect that. I absolutely have to respect that. But I also know that if that switches, that is big money for downside options. Now, I'm not willing to just go buy SPY puts. On a day like yesterday, I didn't even price them out. Not willing to go and even buy something like an Apple yesterday, where, I did get an hourly bearish signal, but it's just too market weighted. Wasn't willing to do that. But Twitter and FedEx, which are much less market weighted, which much greater stories in and of to themselves, yeah, got signals, was willing to run with them. Option price is not bad at all. And so you can see Twitter breaking down below the 7-day moving average, right? Earnings gap, it's retraced some of that gap and breaking down below the 7-day moving average. There was my entry signal. Boom, go. And I can use the open price from yesterday as my stop point. Right. And so that's all, and that's what I'm looking at here. Now, Twitter's probably going to gap up a little bit here this morning with the market. It does have some market weight. It's set to gap up, about 12 cents? Well, let's see here. 12 to 14 cents higher is what we're seeing on Twitter right here. But not really much of a pre-market move here. But, most likely going to run with this, looking for yesterday's open price to hold there on Twitter. Now, a little bit later, I did go get into some FedEx, and one of the things that I was one of the orders I had ready was an Apple order, And, here's Apple, and we talked about it yesterday, and Apple is trading near its lows. All right, do we have this kind of little false break higher followed by a dip lower? All right, can I go take advantage of that? And I decided to hold off because of the market weight. It wasn't closing near its lows. We were starting to see it bounce, so I said, no, I don't want to go and do that one. So I went with FedEx. And, we've talked about FedEx, and I've talked about the earnings, the December earnings. I think we're game-changing for FedEx, for the company. And, it's one where I don't see a V-shaped recovery, regardless of what the market does. And, one that I want to find an opportunity to short it over the course of the next 3 months before its next earnings. And, haven't had that opportunity, haven't had that signaling here. But we've had now multiple drops below the 7-day moving average. This time we had a kind of fairly high volume drop. We're rallying back on fairly low volume, and I use this kind of mini rally as an opportunity to get in. Now, on the hourly chart, you can see the move from the upper band breaking below the 7-hour moving average, right? So there's my technical trigger saying, all right, let's go. Let's, I'm ready to get in and to trade this lower. And I'm looking for this to come into the 172 to 174 area overall. That's where I'm looking for FedEx to go. If it breaks above 183.5, I'm most likely going to have to back out, take a small loss, and look for another entry point here with that. So both of these trades, technical signals, one more of an hourly signal on a daily chart that I'm bearish on, one more of a daily chart signal. Okay, but both of them stocks that I'm overall bearish on, and but both of them that, yes, there's definitely market risk here. To me, that's the biggest risk in both of these. If the market were flat over the past month, these two stocks would be down, and they'd be down sizably. It is definitely the risk factor out there, that I have to take into account, that I have to say, well, do I want to take that risk, right? And at some point, I do have to take a risk, and this is one of the first times, here this week where I got some signals, kind of confirming some of my bias, so I went and ran here with those, all right? Now, FedEx here after the bell yesterday, you can see FedEx dropped, in the pre-market. I was not able to find any news. No matter where I went, no matter where I looked, and went to some of my normal channels. I even texted one of my buddies and said, hey, do you see anything? And he responded back, no, I don't see anything. And, I went and looked at UPS and some other things. And, there's some things you could probably say, hey, maybe. But I don't think anything, too major there. But it did drop here in the post market. But pre-market, the bid and the ask aren't really indicating anything, so I'm not reading much into that here. When it comes to FedEx, just kind of looking to run with it with my stop level in there. Now, for the challenge, these two positions, they put me all in basically, right? And that's not a position that I've been in for a little bit, unless the challenge has gotten low. But both of them, reasonable risk reward. Reasonable risk, really dynamic reward, if they do go my way. So I stepped into those to run with those. All right. I'll talk about them a little bit later on today if I'm still holding both. But that's kind of the entry there on them. And please note, that not once did I say, well, I think the market's going to go down and it's going to take these. No, the market is the risk factor in my opinion for both of them. Right. This is not a market play. This is not a play where, I think you look at both of these and go, well, man, okay, time to just go short the S&P, time to go, short anything. No. These are two individual plays. I think if I went and bought some Bank of America puts, man, maybe you read something a little different into that. But again, I can't stress it enough. Please, let the challenge trades be challenge trades. Go back, go back to some of the challenge videos that are posted in the must-watch videos about what the challenge is and how it functions, and realize that a trade and an opinion on the market are two very, very, very different things. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you later. Take care.